What's on, everybody? It's your boy, Mr. Banks, coming at you live with another trade recap. Now, today we'll be going into a little bit of the BBR strategy, the strategy I used to grow my small account and use today to take AMD puts with the team for over 200%. Now, go ahead and hit that like and subscribe button so you don't miss any of this educational content I put out on a daily basis to help make you a profitable trader. Now, as always, you guys know that we always go over a live trade that was taken today. So let me go ahead and share my screen with you. Awesome. As you guys can see, AMD puts at open with the team. I am on voice giving these alerts out as well, but also giving the text alerts for anyone who can't be on voice. 200% banger. You can see that right there. Coming in to the wins. Shout out to the team for having some amazing wins today at $1,500 there. Coming down to $3,000, $3,000, $900. Team absolutely ran it up today, but you guys came here for the trade recap. So let's get into that. AMD, why did we take puts? Well, as you know, AMD did break into all-time highs. What is one thing that we need to know when we're trading? Yes, that is right. We need to always be looking at the bigger picture, the bigger levels, right? We have to work our way from the big time frames down to the smaller time frames. This is something that you should be doing on a daily basis, even if you're just taking a trade, um, intraday trade, right? Taking a day trade, you should always be looking and going through the different time frames, right? Don't just get stuck on the 2 minute, 1 minute, 5 minute, whatever you use. Still go out and look at what is the 1 hour. Is it still is it a bullish trend? Is it looking bearish? 4 hour, daily, weekly, 30 minute, right? Go through all the time frames to give you that conclusion of knowing, what is that macro trend that we're in? Is this day trade that I'm about to take going to be fighting that macro trend, or am I going to be going with that macro trend, which is what we should always be doing? In some cases, obviously, if you're good enough, you can take uh, the opposite of the macro trend, but for most traders, you should be going with the trend, right? Because trend is your friend. Now, today, obviously, we broke, not today, but last week, we broke over all time highs here on AMD. And we had a nice pullback here into about this 165 level. Now, I did with the team give this to them here on Sunday. I said AMD, everything new all-time highs, watching for a break and hold over 176 to get long into 180. But I'm also watching for a pullback into 168, 165. Gave it to the team today. And where did we hit? Exactly right at the dot on 165. So why did I take puts at open? Well, when I was drawing my charts here at the open, I made them blank for you guys. I was looking at this and I saw one thing in particular. I saw this pre-market low here, saw a huge imbalance. You could kind of say it's a big fair value gap here on the 1 hour, but either way, it's a huge imbalance that needs to get filled, right? If we break below this level, we have a huge imbalance here. And what I mean by imbalance is that there was an imbalance between buyers and sellers. And what typically happens when we have an imbalance is they get filled, right? If certain levels break, whether to the upside or to the downside, this imbalance gets filled at some point. Now, today we did get filled. So when I looked at the 1 hour, I said, okay, if we break below this level, which is pre-market low, we have a very, very big um long way down, right? Long way down to at least that 168 and then down to about our 165 level down here, which we hit on the dot. Major support on the 1 hour, right? So this is something that everyone should always be looking at is, where are my major levels? If this breaks this major level, where would the next major level be? We can see that we have a huge imbalance to fill here. We have a long ways down to fill the imbalance down to about 168 down to 165, which is what we got on today. So before I started this morning, I already looked. I said, okay, what is the low of this pre-market low? We see we have a massive imbalance here. If we break that, more than likely going to go short, right? Going to go short into my big demand level here that I have on the 1 hour. Obviously, a demand level on the 4 hour, and we look at the daily, this is what I drew on Sunday. big pullback area right into this nice big demand. You could see this is where we broke out into all-time highs, and we're just coming back to retest it, right? What do stocks do? They break out and retest. All AMD is simply doing, or what it did today, is retest a previous major resistance or a previous major supply, right? Turn into demand. So we have a big demand here that we're just coming back into. Great. So we have our level to trade. Now going down into the smaller time frames, excuse me, we have these levels. So the levels that we need to know are pre-market low, yesterday's low, yesterday's high, and pre-market high. So pre-market high, pre-market low, yesterday's high, and yesterday's low. Now, obviously, yesterday's high and low are going to be in Fridays, right? Because we're trading it today's Monday. But they still apply, right? They still apply. So as we saw on the 1 hour, right, huge imbalance to fill if we broke that. So let's go down to the 5 minutes. I typically trade on the 5 minute time frame for most of my trades when I enter into a trade. Now, as I said earlier, I go through all the time frames, but to actually enter the trade, typically I'm using the 5 minute time frame. Now, just looking at the price action without any EMAs, we could see that touched all-time highs, we rejected, we're putting in a lower high even in this pre-market, and we had a nice big fat sell here coming below our level. Now, when we're trading these levels, whether to the upside or to the downside, the best way to trade them, especially for a newer trader, is to wait for that break and hold, right? Candle close, and wait for that back test, right? Wait for the back test into that level. That's going to give you a higher confirmation in continuation to the move that you're trying to take the trade on. So we can see here, we broke this level. We had a back test here. This was a pretty textbook setup to take to the downside. I mean, very, very beautiful, very, very textbook. We broke pre-market low. That is going to be bearish, right? That's going to be a bearish confluence. So when we're taking these trades, one way to have that confirmation that everybody wants to know is having a lot of confluence, right? Is that having confluences. So the more confluences you can put together, the higher the A plus setup, if you will, it's going to be. Now, do A plus setups work all the time? No, they don't. They're always going to be a normal market loss within A plus setups. Uh, but A plus setups work more than they don't, and that is how you become a profitable trader. So we're taking pre-market low. We saw on the 1 hour, very, very big level. We broke, we retested, we took the entry, and we rode this thing down. Coming back down, we also had a bear flag within this trend down, which we could have taken, right? We saw that we had this nice little supply. Essentially, what is happening here? We had a bear flag right into the supply intraday, and then another big move down right into our 165 level where we had a nice bounce into it. Now, you may be asking, where are these 1348 cross down below 200 EMA? Where is that coming from, right? Where is that coming from? Well, that's going to come to the BBR strategy. It's called the bounce break reject strategy. And I made the strategy so that newer traders or even experienced traders, have a simple strategy where they can find A plus setups, where they know what type of trend is happening, where they know where to take entries, where they know where to take exits. Now you'll get to a point where you don't need EMAs. You can look at the price action and see clearly, okay, this is what's going on. This is a trend. I mean, we could see this a trending down. We could see, back test into supply, back test into major levels to take the entry. We can see all that once you become experienced. But this BBR strategy breaks it down even more to help you guys out. So let's go ahead and throw that on. Now, using this BBR strategy, obviously, I always use volume as well in my price action. 1348 cross down, right? 1348 cross down. It's just like anyone who uses the like 921 cross, people use the 1021 cross, 2050, whatever EMA cross that you know of and use or have used. Same principle applies here. I personally use the 1348 cross. Why? That 48 cross was in a Yahoo article years back where it came out that essentially this 48 cross has the highest probability. Google it, type in Yahoo 48 cross, like golden cross or something. You'll be able to find an article. It's pretty old now. Um, that's where I first learned it. I used a 1348 cross. And it's very simple. If it crosses down, that's going to show you that, there's some bearish sentiment. And if we now start to diverge, it'll show you that the trend is now forming. Likewise, if it cross up, always going to be bullish. Um, Very simple there. We also have the 200 EMA. We use this just like we would use the EMA or the 200 on any time frame. I think that's one of the EMAs that most traders learn first is the 200 EMA. Now, the 200 EMA, as we know, is a huge magnet, especially on the daily. Above bull is still by the dip, below, right? Short the rips. 200 EMA, you use it the same way on these lower time frames to take our day trades, take our intraday trades. So we have the 1348 cross. That's one confluence that it is bearish. We broke and held below that pre-market low in conjunction with a major hourly level. All right. Well, there's our second confluence. And now we broke and held full candle closure below that 200 EMA. That is our third confluence given to us, right? Using these confluences, showing us, we are in a bearish trend. Now, we can see right here, these EMAs, the problem with EMAs is that they only work when it is trending. But as a newer trader, only taking trending stocks is going to net you more profits than not, right? You want to take a trend, right? When things are choppy, they're scalpy, that's not good for newer traders. I mean, we could see right here, we got very choppy, very scalpy. That's not something that a newer trader should take. They should always be taking a trending style trade. So when we see these EMAs start to diverge, they pull apart, that's showing us that a nice big trend is forming. When they start to get bunched up together, that you can see right here, it's showing us that there is no trend. It's very choppy. Best to not trade that, right? So the good thing is the EMAs work when there is a trend. Bad thing is they don't work when there's not a trend. But at the end of the day, you should only be taking a trend, right? You should be taking a trend trade. So in all reality, it works in that regard. So again, I'll go over this really quickly again. 1348 cross down, something that we use to show us a trend, to show us bearish sentiment, confluence. We broke and held below this pre-market low. Also a huge major hourly level, second confluence for bearish below the 200 EMA, third confluence for bearish. We broke, retested, textbook right here. We retested into that 8 EMA. Now I have the 8 EMA on here because the 8 EMA is a good trend indicator. This is going to help you stay in the trade and hold runners for as long as possible. It is a great trending trade. I also use the 13 and sometimes the 21, but we'll get into that into another video. But for this video, 8 is a solid trend indicator when we're using the EMAs. And you can see right here, we're just following the trend down. And how we play this is we can hold runners and sell runners along the way until we have a break and hold over this AEMA. We could see this AEMA. We have price action moving and breaking and holding over that AMA. Now you can see that the trend was now broken. This is where we can sell the rest of our runners out, right? Freely, we can see that the trend was broken, right? There's no more trend. Trend's not our friend anymore. So we sell out of the rest of our runners because it could be a possible reversal happening here. So using these EMAs, using major levels, always make sure to look at the higher time frames and work your way down when you're taking these trades. Again, below this pre-market low, 1348 cross, below the 200 EMA. We even had a bear flag right into the AEMA coming down. This was a textbook break, retest for entry. Ride that sucker down on the AEMA. I mean, beautiful, beautiful textbook. We also had some nice big sell volume coming in. And even when we had some buy volume here, still decreasing, right? And we did have some decreasing, but then we had some big sell volume start to come in again, decreasing buy volume and then just more sell volume until we started to see some buy volume start trying to trickle its way in here. and had a nice little bounce. But we had some major sell volume coming in as well to add to another confluence into this trade. Now, if you guys have any questions about the BBR strategy, check out my videos. I have a ton of recaps on the BBR, even more trades from calls to supply and demand to more put trades that I think you guys will find to be beneficial to you. If you have any questions, drop them in the chat. Be sure to like and share this with as many people. I'm trying to help as many people as I can this year, right? That is my mission, to make as many profitable traders as I can. Now, I will end it on this. I believe in all of you. I know that all of you can and will become successful traders. Just never give up. Put in the work. You guys got this. I mean, you guys are already here putting in the work. So I know you guys are on track to become that successful trader that you want to be. Just, I believe in you. Believe in yourselves. Again, guys, my name is Mr. Banks. Thank you guys for tuning in. Love you guys. I'll see you guys on the next trade recap.